Well, hello. I'm going to be looking at the DAX rotation. And a warm welcome to one and all. And for those of you who have not seen me before, my name is Langers. I am the overgrown child that is the Scruffy Trader. And this series of videos is live tests of a strategy that I've been working on. It's an older strategy. It's been around for quite a while. The original one doesn't really work. Well, it may work for you, but it certainly doesn't work for me. I find it little more than gambling and just flicking a coin. But if you strip any strategy out, you can modify it to your own way. And that's exactly what I'm doing. And these are live tests. It's having its moments, but it's getting there. So if you like that and you want to see the journey continue and see if it actually turns into something worthwhile, click that subscribe button and we'll go crack on. So let's have a look. It's currently 10 to 7 in the morning. It's an early morning strategy, this. And the idea is to build up, well, basically one trade each morning before you go to work, to see if you can generate, well, some form of a wage, if you want to call it a wage, or a little nest egg to buy a car or anything. Now, last month, well, I'll show you, came out the gate quite well. We increased the pot size by 19% last month with it. But as with most things, that could have been a flash in the pan. And this month we're actually down 36 quid. Got a royal smack in the teeth last week, which is not good. And I've also had a week off, so I haven't got a lot of time left to get a positive expectancy at the end of the month. However, as long as I can end this with one, that's fine. And you'll always hear me say things like that in my videos, because I'm a true believer in start with 0, end with 1. Don't matter what happens in the middle. So as long as I end the month in a positive expectancy, then that is fine. I don't worry about the losses. Now, last week I got a colossal kick in the balls. I wasn't really paying attention to what I was doing, and yeah, and I paid for it. So, case in point, and as you can see in my notes, everything told me it was going the other way, but I was following the principles of the original, and it just proved that it's nothing more than gambling, and it's not something that I like. And that's the idea of this. It's showing it in real time and building it up, and it's basically told me it's not working. So I had to add in a couple of little rules, which we're going to look at this morning and see how it gets on. Anyway, so that's the scores on the doors. We're at 79p a pip still, which may, hold on a second. Right. Now this is one of those situations where the margin is caught up to the balance. So what happens is we're going to have to go backwards. So we're going to have to reduce our bid size. Why? Because we've only got a certain finite amount in here. So on a smack like this, we're going to take this back to 60p. Okay, so we're going back quite a bit. Why have I done that? Because I want a little bit of movement with the margin. If I just reduce that down to say 70p, I could open the trade, but I would struggle with margin calls, because if it goes against me a little bit, it would immediately pull up the margin call. So let me just have a quick look to see how much that costs. Okay, yeah, well, that's about right, 60p. 60p costs 455 to open, which gives me a little bit of about £100 worth of margin for it to breathe a little bit. And we just start the process again. And that's what happens when you catch up to the margin. It's great when it's running, bank it while you can, but when you get a punch in the noise, take your foot off the accelerator, move your position size back over, and start again, build it back up again. That way it helps with your psyche as well, because it means your losses aren't as horrific. Okay, right, so we've reset that. Let's have a look, see what we are trying to achieve today. It's 8:39. Okay, right, okay, so what are we looking at? This morning we are going short, and it's 5 to 7, or it's 6:53. I'm expecting this to squeeze up, so that's what I'm going to be looking at. This is my last point of entry, and then we're looking to get down around this area here. I'll just draw a little box in so you can kind of highlight roughly where we want to get to. So maybe it's around there, okay? But it's that box what I'm aiming at. But I'm expecting it to kind of squeeze up a little bit and then slam down, okay? Now, because of spreads and one thing and another, I can't start putting orders in till 7 o'clock. So that's it. We shall just see what happens. So I'll pause the camera now. Well, no, it's only a couple of minutes. I'll just speed it up, and we'll leave it as a single camera shot, and then you can see it running. Okay. I'll catch up with you when this is all done. Okay. But just so you can see the date and time. If you look at the bottom of the screen, you'll see Tuesday the 20th, and it is the 6:50 candle on a 5-minute chart. Why do we do that? I watched a couple of videos across the weekend. I was watching a chap who was trading the DAX, apparently live, saying you can make a wage every day, one thing and another, and he sounded really good. But the chart was 2 weeks out of date, and he was talking as if he was trading it there and then. It wasn't. It was on a trading view, and it was just false. And I don't like that. Whenever you see me trade, the video was up the same day, if not the next day. And it's you can just see it straight away, and you'll be able to see the chart and verify it yourself. I really dislike these rollback things. There's nothing wrong with them, but not if you're saying that's what you're doing live. It's not live. There you go. Anyway, sorry. Kind of got me go at the weekend. Never mind. Right. I'll let this run out. Okay guys, I'm back from the office and we'll have a quick look, see what the rotation did. I had to kind of stop the camera because obviously I weren't here. And anyway, let's have a little look, see what's happening with it. Came into target. I did watch it. It was a little bit scary, but I needed the camera to do some things for the scruff and also my normal day trade video, which should be up now, I would have thought. Anyway, this came into play. Still learned another lesson today from it, which is good. And let us sort of update the sheet. If you bear with me, and I'll find it. Right, there we go. So straight 27 of 60p. Okay, so here's first day back. 55917. I'm still pretty bad with this, but we've got 27 quid out of it, which is started. It's pulled us back, pulled us right back out of the mire. Because, like I say, we got a royal slap last week, and maybe I wasn't paying attention, but it happens, and you've just got to roll with the punches. But then again, shouldn't have happened in the first place, and I should definitely know better. But what we're looking at is really just a testing session. It's trying to build up something that is reasonably robust, and that's the idea. I mean, we pulled it back now. We're £9 behind, so that's good. I can vaguely live with that. And the thing is, we're still more than we started. Okay. And what I mean by that is the initial start at the start of the test. And we'll just endeavour to keep making this better. Now, I've got an extra layer to go into it today. The problem with having lots of layers and rules is sometimes they get confusing, and I don't want that. I want it down to maybe 4 rules. But I'll put rule after rule after rule in. At the minute, it's up to about 8. And what I'll do is I'll start taking rules out that don't pull any relevance in. In other words, what I'm looking for is I want 2 confirmations and 2 triggers is basically what I'm looking for. And at the moment, I put them all in and then I work my way through it. And the idea is I'll be able to take the weaker ones out and I'll be left with a compact plan. That's the idea of building up a strategy. And it's how I build strategies. It's how I built GoldenEye and things like that. It has 4 primary points, and each one of them represents a strength to whether it's A1, A2, A3, etc. You might have heard me talk about that. And that's kind of what I want to do with this. I want to boil it down into sort of the easier parts, because I do believe the simpler you keep your trading, the more effective it becomes. But the DAX is a wild, well, I was going to call it a wild beast. It definitely is a bucking bronco, because it can shake you out of trade. So you've got to hold your nerve a little bit with it. But the problem with holding your nerve with something like this is if it's going to bite you, it's going to really hurt. And that's the bit I need to iron out. I need to iron out the painful part. The pleasure is wonderful. The pain, not so much. So back at it again tomorrow. And this is an ongoing thing. And I'm kind of just letting you see what it is. And then when it's all nuts and bolted, it'll be ready for the squad to play with and hopefully make some money. And in the process, well, I might make some before I actually lose the pot that I've put in here. But the idea is to get this up to about 1,000 quid. Ish. So there we go. Anyway, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.